All right. All right, so pretty much continuing our talk from Saturday, right, was the fact that we were pretty much around here, I believe. Yeah, right around here. And pretty much the image presented was, even though we were still at a high low retracement and valid because we are still mitigating something, which was here, which I believe was the H4 inefficiency. No, probably H daily. Yeah, there we go, daily inefficiency. So because that was still in play, right? Remember what our pretty much our doodles were here, our drawings, right? Was potentially seeing an increase and then seeing a break of structure continuation, right? Seeing this pretty much this idea, not this one, but seeing this overall idea here pretty much play out, and that was as a result of our M5 inefficiency here, right? As you can see, right? Perfect mitigation during New York, during London session, I'm sorry. And pretty much from there we've been ranging, and we created a new internal structural range. So because we mitigated something here, created a reaction, right, and then took it out, this is a type of disruption. So the structural range at hand is from this high that created the new low, right, and that even took out that previous structure point, which is our point of invalidation. So we now have a potential break of structure plus a potential disruption on top of another break of structure based on this low. So as we can see currently, excuse me, right, potentially looking at an inefficiency here, right, potential inefficiency fill that occurred right before New York today, but the reaction was not convincing, right? You obviously had the internal break of structure continuation BOS, right, and then the full BOS continuation, which would be a high low retracement continuation, and then from here during session, right, we then came and broke the preliminary level of structure, and then we came to to pretty much take the previous liquidity. And so now this is pretty much a type of no man's land to me, because the final leg to the downside that took structure was broken, right? But then we immediately came and took that liquidity out and essentially gave a liquidity grab because we took liquidity, then took preliminary structure. So in my opinion, we could see higher here, but the question is how much higher. Sorry, did not mean to do that. Right, so thinking realistically, if we do indeed break essentially the POI where this was being mitigated from, and we take out this high, I'm more than likely going to want to be bullish because we gave a proper reaction, right? Gave a bearish structural range, which could still play out potentially. But if we do take this high out, then we now have a bullish structural range, right? And we're now looking at a potentially a deeper retracement. We could even come to 50%. Here we could top structure, do something like that. But honestly, I don't want to see this really take this high out. Doesn't make much sense to me, especially because the direction has shown its hand, right? And we do have a potential inefficiency here, right? So if we do take this high out, we could potentially see a liquidity grab in terms of taking the high out, mitigating, and then taking a preliminary level of structure, no matter whether it's up here or down here. We can't. We don't have the. I'm sorry, we don't have this data yet, so we cannot assume if there's going to be a high here. So the potential of this being a turbulence point, and we still see the continuation, is still there, but it's kind of bothering me a bit, seeing that we didn't just go immediately today. So this is now becoming very, very, very sloppy, very, very messy. Not to mention if we're looking at GU as well, I'll talk about that in a bit. But looking at where we are in the structural perspective, right, we are still seeing the high-low retracement that we talked about this weekend. I'm sorry, on Friday. And beyond that, right, this is now a confirmed high because we've taken out the overall low, and we even took out the preliminary low. So realistically, this high should not even, be challenged per se. And then now that we've had a solidified high, right, we now have a high all the way to the low. We had the retracement because we had the preliminary level of structure start to be taken out, and we now have a new confirmed structural range. So this is why I'm being, very, very cautious. And because this is now, essentially giving you a solidified high, right? Keep in mind, we're still bearish, 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 right? So I don't want to stray away from that bias just yet. If we do take this high out, then now I'm going to be a lot more cautious, right? And we might not even react from there. We could literally come for liquidity here, because if this high is taken out, excuse me, this is now seen as a liquidity grab based on that, right? So it becomes a bit alerting in terms of the bearish bias if, we do take this high out. So that's why I'm trying to be conservative here, right? There's even a wick here potentially that took liquidity, gave them to the downside, right? And so now this could be a potential liquidity grab, right? But the fact that we did create a solidified high and then taking that out kind of, is not necessarily the best type of scenario that I would like to trade right now, in case we do have the liquidity grab, especially during London, giving an intraday break of structure, and then try to get a continuation in New York. Okay, that makes a lot more sense because the narrative is now constructed via the liquidity grab, right? So just be cautious here, and we'll go and pretty much wait till that reaction occurs. But now looking at EU, right, same thing as DXY, looking super messy. In terms of direction, right, something that's, pretty alerting is the fact that our structural range is still low. It's still low, it's still down. So we have the mitigation, we have the disruption, right? But now that we start zooming in, right, we're obviously at a low high retracement, right? The retracement is confirmed because low high retracement, preliminary level of structure is taken out. So this is now solidified low, right? But the leg that created that final push is just about to be broken. So I'm not really too, essentially, I'm not favoring that buy side just yet, right? Unless we get more data. So going to H1, right? If we're looking here, this is the only reasonable place of mitigation that we could potentially reference. But the issue with this type of POI is that the structure point has already been solidified. So this is now, if we come down here, this is now a bearish break of structure, high, low, retracement, continuation, right? So this is becoming very messy, and I'm not, being too lenient towards the buy side just yet. But who's to say, this isn't also, like we said with DXY, a type of liquidity grab, right? And who's to say we don't mitigate potential inefficiency, right? Then take preliminary level of structure out, give us that potential narrative, and then play based on the narrative. That's essentially what makes more sense to me. But as of now, I'm not touching this. Right, I didn't want to touch this morning, just because if we're looking at our minor intraday, right? If we're looking at our minor intraday, right, we have obviously our low and high, right, and we have a solidified low based on this taken out. But if we're looking at our smaller time frames, right, if I'm looking at this, excuse me, I'm looking at this as a high low potential retracement to the downside, but that's not in correlation to what our overall structural range is. So naturally you have to wait, right? So what do we see? A potential inefficiency fill, right? The inefficiency fill creates a reaction, solidified high because we took structure out. Right now during session, right, keep in mind we're here, this is not somewhere I want to take an execution, but I would love to take this, right? So looking at this now, right, we see this takeout structure. So that is not only a bullish break of structure, that is a bearish disruption of order flow. So, right, naturally this is where I would want to buy. But what is alerting me now is look at this momentum. Momentum, right? The volume is also relatively high, as you can see here. Right, even though it's not as high as before, it's still diminished, it's still high. So high volume, high momentum, that's not really in correlation to what I would like to play, right? And so if we're looking at that perspective, we're looking at this perspective, right? Obviously the high momentum, right, caused the unwillingness continuation, but this immediately then gave a push to the upside, making this a liquidity grab, right? So we are now looking at a potential discounted area for continuation. Excuse me. And because of that, right, I'd be looking for any type of discount. Didn't get the discount, but we created a new high, right? So now this isn't making much sense to me because now we are taking structure out in order to come here. And, you know, that's not necessarily, or that's more so to me considered picking a low. Because even though the leg is still bullish, if we're taking out the final leg, right, which is here, this is now considered to me a bearish break of structure, so it's not necessarily the type of trade I want to take. On top of that, it's also a bit later in the day, so it's, you know, very unappealing, right? So off of that pair, right, looking at GU, right, very, very sloppy, very, very messy. I don't even see this as a schematic at this point, right? Because let's try to compare these. Let's compare these. So all right, looking at buying climax, secondary test, up thrust, UTAD. Right, so buying climax, right? However, it's not a climactic action in volume, right? It is over here, but this is more of a preliminary supply to me, right? Because this is where the trading range is. So I don't want to consider this the buying climax, right? Volume is still relatively low, right? Even up and coming there, right? Volume is relatively low, even at the potential buying climax, right? So we didn't get a secondary test, right? We immediately got an upthrust to the upside, right? So that off the bat to me shows to me that I'm not looking for a schematic. I'm more so trying to read structure. So the high, right, is generated here. We get a retracement, right? Then we move higher, but that is unwillingness, right? So we are now bearish, right? We then take out the preliminary level of structure out, which is this final leg to the downside. We are now bullish again, and this was the position that we talked about on last week, right? Remember, we caught the sell and then we caught this buy here. So this buy led to target smashed, target smashed. So remember what we said, that there's a potential there's a potential opportunity of seeing this completely melt because we're taking out so much liquidity, which is, you know, a high from February, right? And so now we are in a bearish structural range. The continuation occurred, right? But then we have a super high, a super deep, I'm sorry, retracement, right? With momentum, right? So it's very, very choppy, very, very sloppy, right? And even though we got, you know, this reaction yesterday, I believe, yeah, yesterday, right? This did not form a new high, right? And as we go into our intraday time frames, right, this is the potential mitigation we talked about, and I'm sure somebody got a very nice intraday play here, right? But this, in my opinion, should have taken this out because we have relative equal highs right here. So if this didn't take it out, we then take the preliminary level of structure out. This is my solidified high, right? So the solidified high does not clear previous highs, making this unwillingness. So now naturally, this is not where this is where we should be targeting, right? But the thing is we're stuck in a range. Yes, this is a, let's see, this is a 176 pip range. Does that mean you can't get a good 30 to 40 pip intraday trade? No, by all means, go for it, right? But this is where you ask yourself, am I a swing trader? Am I an intraday trader? Am I a scalper, right? And you know, a lot of you will probably say both, whereas, and by that I mean you're both an intraday and a swing trader. Okay, so you know that you're looking for two types of trades, right? So now you have to look at your pair and acknowledge what kind of pair, or what kind of trade you should be looking forward to. So because we're in such a premium from an overall scale for looking at a swing, right? It doesn't make sense for me to look for any type of long term, unless we get any type of order flow disruption from a minor major intraday time frame, right? Or we get something showing its hand, right? So nothing is showing its hand. I shouldn't be bullish, but I also don't want to be bearish because I'm pro trend for the majority of the time, right? So it creates a scenario where I don't really want to, you know, expose myself to this type of environment. Okay, so looking at this now, it's just like we're at a point where either we're gonna break to the upside or we're gonna break to the downside. And I hate saying that because, you know, I don't want to be the guy that's like, you know what I mean? Like, I don't want to do this. But because of where structure is, all right, let's delete this. You guys know I like to look at the immediate ranges, right? This is bearish, but we have momentum, unwillingness, 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 right? So this is no man's land to me. Can you play inside of here on a smaller time frame? By all means, go for it, right? But the way that I'm looking at this, I want the bigger picture to be intact, to be clear, to be concise, in order for me to make a judgment, right? So when that's not there, then it's hard for you to make a judgment. Therefore, my positions are a lot less rational than they should be, right? So this is where you ask yourself what kind of trader you are, what kind of trades you're looking for, right? And for example, let's say you're a scalper, right? Is your minor and major intraday trend confirmed for that day, right? Especially if you're a scalper, whether you're an intraday trader, maybe hold a trade 1-2 days, right? Okay, is my minor and major intraday direction intact? Is it clear? Is it concise? Because obviously my swing, my overall swing position bias is still intact, right? Well, you could say it's intact, but at the same time, you know, we are potentially bearish, right? So that automatically doesn't coincide with what I see is to be, you know, the overall direction, right? So for the meantime, right, it really just depends on which way this wants to go. If we're looking at overall picture and overall direction, I'd probably lean towards the downside, just because one, the structural range is intact. Two, we have a very major liquidity grab that has occurred here, right? So who's to say we can't start seeing downside movement, right? It makes all the sense in the world. And if you're wanting to look at this, right, from a schematic point, right, even though I don't fully agree with this, right, you could say your preliminary supply, buying climax, right, upthrust, UTAD, LPSY, but the LPSY has not created a new low. So LPSY, and this is now just a flag, right? So if we do get something show its hand, then we now have the primary structural range, and then that's where you make your play, right? But if I had to put money on it, I wouldn't put money on it. Well, let's just say that for once. But it kind of does, you know, I do want to lean towards more the sell side, unless we have another bullish break to the upside. So with that being said, that's pretty much today's lecture. Do you guys have any questions? Let's see how many people we have. 9. Cool. Any questions from anybody? Nope, no questions. Also, so I just released, right? So I told you guys about the blog. I actually just released the first episode. Well, not the first episode, but the first entry. Is that how do I say it? Right, I just released the first one. Cool little read. Right, would appreciate if you guys read it, gave me some feedback, even discuss it in the chat. Pretty cool. It's a concept we've talked about before, but I do, explain what it is and then pretty much give my 2 cents on it. So I would appreciate if you guys check this out. With that being said, oh yeah, also for the people that are gonna watch this after it's uploaded, I'm kind of leaning towards wanting to change Tuesday's time also to the morning, same time as Friday, just so I can actually have the rest of the day, especially because I dedicate a lot of my time outside of the charts to doing stuff that I like this, researching cool stuff, and whether it's doing other activities or anything like that, I would like to have the rest of my day to myself. So my trading hours would be the same, basically 7 to 10, and then we do our Zoom at 10:30, and that would be so much better because I now get everything trading related out of the way in the morning, and then I could focus on school, other activities, the blog, principle over concept, stuff like that. Yeah, so if you guys don't have an issue with that, probably next week we can start diving into doing these in the morning. Right, and I think I could organize myself a lot more that way too. But yeah, do you guys have any questions? If not, we can end it off here. All right, cool. I guess we're good. All right, guys, thank you guys for hopping on, and I'll see you guys on Friday.